All right, so you sent over a ton of stuff on Bitcoin and crypto articles, charts, even your own notes. You're clearly ready to go deep on this. So we're going to tackle this head on. What's really going on in the market right now, beyond the hype.
What's fascinating is how much information is out there, but it's not always easy to connect the dots. We've got this Crypto World YouTube video, Gitcoin and crypto just flipped. Do this now, which is a great example of that high energy market take, but will help you filter the signal from the noise.
Yeah, this guy's all over the place with moon talk. But you've also flagged some more cautious articles that paint a different picture. I'm actually kind of skeptical of this whole flipped narrative. What do you think?
Well, let's start with the big news. Everyone's talking about that U.S. inflation report. It came in at 2.8%, slightly lower than the expected 2.9% now on the surface. That seems good for Bitcoin, right? Lower inflation money flows to safe haven assets.
Exactly. Isn't this what all the Bitcoiners have been waiting for?
Not so fast. If we look back historically, these minor dips in inflation haven't always translated into big Bitcoin rallies. In fact, a few times it's created this buy the rumor, sell the news effect where the price actually dips after the report.
Huh. That's interesting. So maybe this isn't the clear-cut bullish signal everyone thinks it is?
Exactly. And if we layer on the technical analysis from the Crypto World video and your own marked up charts, some potential red flags emerge. He focuses a lot on that super trend indicator being bearish on Bitcoin.
Right. And I remember reading in one of these articles that the super trend tends to be a lagging indicator by the time it flips bearish. A good chunk of the downside move has already happened, almost like closing the barn door after the horse is bolted, right?
That's a great analogy, and it highlights why it's crucial to combine different indicators and not rely on just one signal. He also points out a bearish MACD on the weekly Bitcoin chart, which has been in play for over a month. Now this one's a bit more concerning because when the MACD crosses bearish on the weekly time frame, it can signal a longer-term shift in momentum, especially if it's accompanied by high trading volume.
Okay, so we've got this potential for a longer-term downtrend, and the crypto world guy is screaming, flipped! I'm starting to see why you were skeptical. But he does mention a bullish divergence forming on the daily Bitcoin chart. Could that be the counter-argument?
It could be, but again, we need to look deeper. He's right that the RSI is making higher lows while the price is making lower lows, which is the classic definition of a bullish divergence. And this is but the divergence isn't very strong yet. It's just starting to form, and the volume during those RSI bounces has been pretty weak.
So it's like a weak signal trying to shout over a lot of noise.
Exactly. Now, if we saw a surge in buying volume alongside that RSI divergence, then I'd be more inclined to believe it. But right now, it's more of a wait and see situation.
Got it. So we've got this mixed bag of signals, some pointing towards a potential downtrend,
Yeah.
some hinting at a possible reversal. What's the average person supposed to make of all this?
Well, that's where understanding your own risk tolerance and investment goals comes in. If you're someone who gets spooked easily by volatility, then maybe it's time to tighten up those stop loss orders or even consider taking some profits off the table. But if you're in it for the long haul and believe in Bitcoin's fundamentals, then this might be an opportunity to accumulate more at a lower price.
Okay, that makes sense. So it's all about knowing yourself, your own investment style. But there's one thing I still don't get. The crypto world guy keeps talking about liquidity and how it's all clustered around certain price levels. What does that even mean for someone trying to understand where the market might go next?
That's a great question. Liquidity basically refers to how easy it is to buy or sell an asset without significantly impacting its price. Think of it like this. If you try to sell a rare baseball card, it might take a while to find a buyer willing to pay a fair price, but if you try to sell a share of Apple stock, there are tons of buyers and sellers, so you can easily find a match.
Okay, I'm following so far. So how does this apply to Bitcoin and these liquidity clusters he keeps mentioning?
Well, the crypto world guy is referring to a chart called a liquidation heat map, which shows where large groups of traders have placed their leveraged bets. And what's interesting is that there's a massive cluster of long positions, bets that the price will go up, or around $71,000 to $74,000. Now, if the price falls below that level, those positions could get automatically liquidated, meaning they're forced to sell.
Ouch, that sounds like a recipe for a cascading drop.
It definitely could be, and that's why understanding liquidity is so important. Those areas of high liquidity can act like magnets for the price, either drawing it towards them or creating significant support or resistance levels.
Wow, I'm starting to see how all these pieces fit together. So we've got this inflation report that's not as bullish as some might think, mixed technical signals on Bitcoin, and this lurking threat of a liquidity cascade. If the price breaks below those key levels, it's a lot to take in.
It definitely is, but you're asking all the right questions, and that's the key to navigating this complex market.
All right, well, we've covered a lot of ground on Bitcoin. I'm ready to dive into those altcoins. You mentioned Ethereum, Solana, XRP, and Chainlink because you flagged some really interesting stuff in your notes about them.
Let's do it. Each of these coins has its own story to tell, and understanding how they relate to Bitcoin's overall price action is crucial. It's fascinating to see how these altcoins, despite their own unique developments and communities, often dance to the tune of Bitcoin.
It's like Bitcoin's the conductor of this crazy crypto orchestra. So where do we even begin? You mentioned Ethereum's chart had some red flags.
Yeah. Yes, and those red flags become even more prominent when we consider Bitcoin's potential struggles. Remember that bearish MACD on the weekly Bitcoin chart, the Ethereum's weekly chart, is showing a similar pattern, suggesting a potential for a prolonged downturn.
Okay, so not the most optimistic outlook for Ethereum, but in one of the articles you sent, an analyst argued that Ethereum's upcoming Shanghai upgrade could act as a catalyst for a price surge. They claimed that the ability to finally withdraw staked ETH would attract a flood of new investors. Could that offset some of the bearish pressure?
That's a great point, and it highlights how fundamental events can sometimes outweigh technical signals. The Shanghai upgrade is definitely a major milestone for Ethereum, and it could potentially lead to increased demand for ETH. However, let's not forget that the overall macro environment is still uncertain. Inflation is still a concern, interest rates are rising, and there's a lot of fear in the market. So while the upgrade could provide a short-term boost, it's unlikely to completely reverse the bearish trend if the macro picture doesn't improve.
Right, so it's all about managing those expectations. A single event, even a major one like the Shanghai upgrade, might not be enough to turn the tide completely. But what about those Fibonacci support levels that the crypto world guy mentioned for Ethereum? Could those provide a safety net?
He pointed out a key support level around $8,870 to $880, and he's right that this area has historically acted as a strong support zone for Ethereum. However, if Bitcoin continues to weaken, it's likely to drag Ethereum down, with it potentially breaking through that support level.
Got it. So even though there's this potential positive catalyst with the Shanghai upgrade, we can't ignore those bearish technical signals and the overall market sentiment. All right, let's move on to Solana. This one's a bit of a wild card, right? Massive gains last year, but also a pretty steep correction recently.
Absolutely. Solana is a high-risk, high-reward play, and its chart reflects that volatility. What's interesting is that it's currently forming a pattern known as a rising wedge, which is often a bearish signal. It suggests that the price is making higher highs and higher lows, but the buying pressure is weakening.
Okay, so we need to watch out for potential breakdown from this rising wedge pattern, but you also highlighted a potential bullish divergence forming on Solana's daily chart. Could that provide some counterbalance to the bearish wedge pattern?
It could, but remember what we said about divergences. They need confirmation right now. The divergence on Solana is very weak. We're seeing higher lows forming on the RSI, but the price action isn't really reflecting that shift in momentum yet, and the volume during those RSI bounces has been anemic.
So it's another wait and see situation. Okay, let's talk XRP. This one always seems to have a lot of drama surrounding it.
It certainly does. XRP is highly sensitive to news and regulatory developments, which makes it a volatile asset to trade. The crypto world. Guy pointed out a massive bearish divergence on the 3-day chart, which is still in play. This suggests that any short-term bounces are likely to be short-lived and could be followed by further declines.
Okay, so we need to be cautious with XRP. But I remember reading an article that argued XRP could benefit from the ongoing legal battle between Ripple and the SEC. The argument was that a favorable outcome for Ripple could clear up regulatory uncertainty